The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour this Friday, the 15th of May, and it's my pleasure to be here Monday through Friday and market days. Haven't yet made the all-time high. Could still work out today. It is options expiration day. There are a couple of things going on here. But first, I do want to just show this chart right here. Right here. Okay, so we're making leg D in the 120-minute chart. That's important. And what my indicators had said was if there was any pullback this morning in the market, there was enough evidence to say that based on my Chapman wave trend gauge, that there should be a rally in the futures, which would help the indices themselves. Should happen within 2 days. So that's going to be yellow right there. What I want you to show is this. If you look at my Dow chart that I use every single day to show subscribers, we've basically been, except for that one little burst of weakness down in the middle part to end part of January, where we made that February the 2nd low at 17,034 in the Dow, basically we've just been in one of the narrowest trading ranges in ages. And I've been speaking about for quite some time, months, about a consolidation taking place and that there could be a rotational correction. And that rotational correction will take either two forms, both of which imply that there will not be new recovery highs for a while in the S&P and the Dow. But most importantly, although my bias was that we would break the 17,000, at the time I didn't know it would be 17,500s, but what I'd said is we would break into the mid-17,000s. That would imply that we would go down lower unless, which has been the character of this particular market ever since the 2010, the summer of 2010, when I very quickly recognized that there were rotational corrections, which is one of the reasons why the Dow never did plunge to retest any of the lows that were made in March of 2009, I should say. So this is a very important period because a couple of things are happening. One is, absolutely, we were stuck in the trading range, about a 600, maybe 700 point trading range, more like a 500 or 600 point trading range. But then what I drew in is this up channel here. And what I said to subscribers is we're going towards the resistance level. And now we've got the Chapman wave inside track, that green, dashed green line that you can see on Tiger TV. That high there, which comes in at about, well, if it's today, it'll come in at about 18,278. If it's on Monday, it'll be just a 10 or 12 points higher. And the red dashed line, which makes the support around about 18,220, maybe 18,200. So that's very important. We've got delineated, very clear repellent lines on the upside. We've got the left side high of March the 2nd at 18,288 in the Dow. All this actually applies equally to the S&P. So this says to me that the stochastic today finally has gone to 81%. The day's young. It might not be there right by the close, but at this point, that's good. That's actually a confirmation of the MACD expanding. And it is also a confirmation that as we're getting to the previous highs, that there is a recognition by the technicals that the rally is at this point legitimate. That doesn't mean to say that you can't get your turnaround here because we've got an alternate wave count of F/B. But what it does say is that within the context of all the different indices. Thank you, Peaky and the Den. That's exactly what I was coming to. The diamonds are the only ETF that has not made its leg D in the weekly charts. And that's unbelievable. Why? Because 182.68 was peak C. And we have not done that. Yesterday, we came within 5 cents of making that leg D. I don't see any reason why there isn't just a little sticker to the upside, maybe today, maybe on Monday, to make that leg D. And then all the little ducks will be in line to say, at least from this point on, if there is a pullback, we have to be ready how can I put this? If the time consolidation, which is really 3, 4, 5, you can even to make it 6 months. If the time consolidation is not complete, then there could be another decline that takes you down towards that 17,500s in the Dow. And that's going to be really important. So even if there's a pullback from here being this close within cents, it makes it a possible peak C1, peak C2. Remember we had that in the S&P, we had that in the E-minis. And then what happened? Oops, that's not 6, it's 5. You went C1, C2, and then you went to leg D, and now we've actually started leg E in the weekly chart of the E-minis. The S&P, I'm going to run all the numbers in a minute. I just wanted to go through this. For those of you who are Chapman Wave aficionados, I want you to at least explain what I was looking at, to explain that while we haven't broken out to the upside, and my theory here is, and I'll expound on it over the weekend more for my subscribers, is that we would need probably something like 3 out of 5 to 6 consecutive sessions over the next whatever period it is that we make. If the Dow goes to 18,000, above 18,288 and goes into the 18, closes, and it has to close in the 18,300s, we would have to have, for a confirmed reversal of a trend, for it to become a brand new buy mode in maybe the daily or recycle the weekly. I want to see 3 closes above 18,300, and it should be over a period of no more than about 7 sessions. That would define really quickly that new buyers have come in. There's a new category, and that category says, watch out, because we've had a 6 month or 5 months or 4, depends on how you want to count it and which indice you want to use. We've had a period of consolidation, a rotational correction. It allows the weak link or links in sectors and stocks to pull back, while at the same time, there is a chance that there's new leadership. And we'll talk about that. And I'll certainly, for my subscribers, be talking about the potential for new leadership here. So let's run the numbers. The Dow is unchanged at 18,251. The S&P is unchanged. That's amazing. At 2120. We had an unch the other day in the S&P. The composite index is down 1 at 5,049. After yesterday's action, this is pretty good, even with options expiration, where there's a good chance to knock them down. The gold index is only down 3 after a really terrific session, so it's at 1221. The silver is at up 0.03 at 1749. Platinum springing back at 1.169, up 10. High-grade copper is at 2.94, getting close to the 3s that you want to see it start to really participate in that whole area of the 3s. Crude oil is about is down 36 cents at 60.48. Bonds are up almost 2 points, and that's going to be very important. And the dollar is down 11 cents at 93.39. Let's do this. Got a call from Travis in St. Louis. Travis, how are you?
Just fine. Good morning to you.
Good morning. You'd like to look at?
Yeah, well, first thing, Clovis, something yesterday just told me that it was about to make a pretty strong move. Just looking at the way the chart was reacting, you pretty much confirmed it. And I did buy some more shares yesterday while I was listening to you. And I'm sorry I couldn't call in to talk to you personally, but it did that crazy spike yesterday, and
Yes.
this morning I went ahead and took off that trading position that I put on yesterday at 89.60.
Oh, that's great.
So sold it around 96.5 this morning, and I still got my core. I am a little nervous though, because the way that it spiked yesterday, it almost went parabolic in a way, and I don't know whether this is just kind of a crescendo to this move, and we're going to really actually start to pull back.
Let me just speak to that, Travis. What happened yesterday is there was this conference that's going on. It's really about, I think it's a breast clinic, breast cancer. So Clovis, you say is lung cancer, but I believe that it got either a recommendation or something happened and became a focal point. Immediately after I picked it up when you sent that email, and I started talking about it, which was in about the 90, what was it, 91,
around $90, right? 89,
yeah, $90, yeah. And the moment I saw that it was moving, it started leg D above that peak C in the daily, and was extending the weekly chart. And the 120-minute chart was looking very good. That was the reason why I said, exactly right. Get onto it right away, and I'm so pleased that I couldn't speak to you overnight, but it was looking to me like this was a leg D with a potential in the 120-minute chart, a leg D in the daily, and talking about the core position. I'll speak to that now for a moment. I know you want to talk about something else. I just wanted to say, I do not want to ever get in the way of anyone who's done their homework, has put in a fabulous trade, just calls me up for some either confirmation or kind of to discuss it in terms that are a little different to the way you initially got into it so correctly. So I don't really want to change anything about your thinking on the stock, other than to say all the criteria that we were looking for, which is way back when it was in the 60s or something, and we were talking about it going to a leg D above 93.33 in the monthly chart, which looked ridiculous. If we knew nothing about the Chapman wave, we would never have said to go back to the top, but because we were missing that D. Now that you've accomplished all of that, my suggestion is twofold. One is, and you absolutely don't have to do it today, but I'd be thinking about saying to myself, it's hit all the targets that I want. Anything from here on is a bonus. That's number one. And because it's a bonus, it means it's unexpected because it's not within the parameters that we were setting. I could even draw a trend line here from the highs in the monthly chart and say, look at this. If you very critically do a trend line to the highs of peak B in June of 2013, peak C at 93.33 in March of 2014, we're within a point of that. So hold on, I'm going to be right back with you. I just wanted to mention targets have been hit. You've got to respect that. I'll be right back with Travis and Scott.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. This is going to be a very interesting chart formation if you're looking at your chart. CLVS, it's Clovis Oncology. And we're talking with Travis. He had mentioned it. I sent an email yesterday during the session. I looked at it. It was at 90, and I said, it's looking very good. Should go higher. So all I'm saying is that this is the time that you can start to contemplate a little bit more about what you really want to do, looking out for the only reason that all the objectives have been hit. So whether you want to lighten up, whether or not you want to say, you know what, it's still acting beautifully. It's still still a very positive aspect. Maybe I will not lighten up. I will just not do anything at this point to add to it. But if it comes back to the 86 to 84 area, maybe I'll look at it again. This is the time for you to just think about how well you've done, how you've traded it, and what your objectives were. And if the only objective missing now is that it still has approvals to come, etc., there still could be a consolidation before that comes up. That's all I wanted to say.
Right, and I just want to say a little bit, I want to get on the fundamental horse on this thing for just a moment. When I originally bought this thing, Basil, back last summer in the 40s, yep. I called you originally back, I think it was probably in August sometime, and when I first did a kind of evaluation on the company, and you look at the market capitalization, I was kind of thinking the company was probably worth around $4 billion, just based on what the potential of this drug could do, and they're at about $3.5 billion now. So it's pretty much getting to the point where I think it's pretty fairly valued around 100. And if it makes another run to a new all-time high above 102, I will probably just say I'm not going to be greedy. I'll probably go ahead and just eliminate most of my shares at that point, if not all of them, and say it's been a great run. I think the company's fully valued because I look at the data yesterday that was out there and that caused that spike. It really is not any better. The data is really not any better than it was a year ago at this time. Yet the stock's $60 higher.
That's what I'm beginning to get the sense of in the most of the biotechs, that whatever is being offered at this particular point, it's really written into the stocks. It's written into the fact that they've overpaid. They are paying huge amounts for rents and all sorts of things like that. I suspect that that's an area that maybe it's not all over for now, but I think they're in for a big digestive period, and many of them have actually begun that and are doing it. So the other thing
I agree. I have a new company that I've been doing some research on for about a month, and I've been reluctant to share it on the program, but I wanted to just bring it to your attention this morning.
Yes.
The company is Tokai Pharmaceuticals. They're actually in Cambridge, Massachusetts. That's their headquarters.
I've heard of the name, but only because it's a different spelling, but it rang a bell because in South Africa, yes. Tokai is a place called Tokai. Yes.
Yeah, I love their management. They got a great team of management over there. But I just wanted to share with you, it's a prostate cancer. They have a prostate cancer drug that I think is going to be quite big, and it appears to be trying to form some sort of a basing pattern right now, but on a valuation standpoint, this is what I'm talking about. When I looked at Clovis last summer, the reason I got into Clovis is because I thought the shares were cheap on a fundamental basis. I look at Tokai, same deal, market cap $250 million, relatively cheap. I think it's for a swap, I'm almost considering if Clovis makes a new high, maybe swap my Clovis shares for TKAI. That's my thinking.
Well, you know what I'm going to suggest? Along the lines of your thinking, what you could do is take the recent profits that you just made in a couple of hours and start nibbling at this stock and just say to yourself, you know what, I don't have to get carried away. I love it. Right. I've identified it. It's near its all-time low as an IPO. The low is in the 9s. I'm looking at it now in the 12s. It's certainly a 30% increase, but it's a 30% increase from a stock that was once in the 13s. It's just getting back to where it was. It actually was at 30 at one point. That's my recommendation. You could even just a handful of shares to get your foot in the door to say, hey, you're the next one. I'll keep doing research. I'll keep looking at the stock. It could retest the lows. It doesn't matter. It's a small position on a profit that I made. I'm really paying nothing for it because it's just it's a gift. That's another way of looking at it. But thank you for bringing it to our attention. It does look very interesting.
I feel probably just as strongly about this one, if not more, than I did whenever I was buying Clovis shares in the 40.
And of course, prostate cancer is the unspoken cancer. Everyone always talks about breast cancer, but actually the effects of prostate cancer can be even more devastating. And although it's a slower progression, once it starts to kick in, prostate cancer can be deathly in the same way as many of the other cancers. So, okay, thank you very much. I appreciate that. Have a great weekend.
Thanks for your help. You as well. Bye-bye.
Thank you. Scott, as we were about to go to the break, you wanted to look at... Is Scott there? Oh, I think he wants to look at Gil. So, Scott, we'll be back with you straight after the break.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. We had Scott from Safety Harbor, and on and off his phone. I guess the cell something happened, and so Scott, if you're coming back on, you just yell at me and say you're on. But you want to look at Guild, which is Gilead Sciences. We had looked at this before, and it was actually one of the weaker biotechs after it made its all-time high at 116.83, pulled back very sharply to 85, and I would suggest to you that that kind of gap down decline in the weekly chart is something to be wary of. And what it did is it bounced back all the way to the 104 area, 107 area in January, and then it came back for a retest in the 90s, mid-90s. And now it's acting way better after that, and it made a peak F-top of 175.50. There again, it has pretty sharp, 197 to 100 to 99.66, 100 points. Can't be right. That's not 197. It's 109. That's what it was. 1075. That should be a 0. Okay, 1075. And now it's running. Good. We've got Scott back on the line. Scott, you are long, I bet. Gilead Sciences.
Oh, Basil, I'm mad at you, but you can't win them all. It wasn't, but right after we spoke, that you kind of spooked me with a 95 thing on Gilead. I got out. I was at 101. Of course, Gilead took off to 109 now. So.
Oh yeah, did you not jump back in?
No. What's 20 grand amongst friends, though?
Oh, this is very interesting. It did. If you look at the chart formation, the way that it pulled back, there was every evidence. It didn't close under the left side low of 99.80, but it really looked from the technicals that it was going to take a little bit more of it. I can tell you right now that the chart I'm looking at in the daily, having made no other count could I have is other than a peak F, did everything that an F should do. A very sharp drop from 107.50 down to 99. So that's almost 8 points.
My take on it was a little different because, I mean, I look at the charts, but I'm also looking at the fact that, you know, there was a lot of things going on in Japan that was just approved for their drug. Apple is, it's crazy to speak like this, but but you understand what I'm saying. Most people don't. They say, well, there's 1,000 stocks, but what I'm going to say is Apple kind of came out of the off stage for a few minutes, and then people started trading other things. I mean, unfortunately, hepatitis is not, it's going up all the time, not down. And this is a premier
let me just
drug.
do two things here. One is, in the biotechs, it is really important to understand that the biotech that you have has a whole bunch of loops that it has to go through in order to really succeed. In the phase that some of them are, where there's no money coming in at all, they've just got one drug.
That's the differential, Basil.
This is a company that's been around a long time, and they've got many, many products in the pipeline. Exactly. So when I look at it, I just want to repeat that the chart pattern that I was looking at, normally, if I looked at this kind of pattern, I would see that it would go from the 107.50 area. Let me just get rid of that. That's not a correct number. 107.50 area, make a V-shaped retracement, and go just, if anything at all, it would only go fractionally above 107.50 in the V-shaped pattern, and then it would have another pullback, and it's that next pullback that would give you the action we're actually looking at right now. So this is my assessment. What do you see now
for the future? Because I kept getting what I thought was going to happen was, I mean, every minute I thought it was going to pull back, pull back, and then I waited and waited and waited, and now it's 109. But everything you said about that stock is true. You can't compare it with these stupid biotechs that don't even make a dime. I don't even know why people invest $1 in them.
This is a mature company. It's one of the leaders in the field. Now, here's another thing. On a purely technical basis, as we're speaking, in the 120-minute chart, it looks to me like it's just making a little bit of a top, and it has 108.25 to maybe 106.50. That's the area, maybe 106 is the area that it should consolidate to if it's going to have any consolidation in the first 3 days of next week. That's where I would probably say to you, that would be your next opportunity to look at it on the long side. The only other thing I wanted to say is that when it comes to the biotechs, you can do as much homework as you want, but either on the long side or the short side, there are always surprises. You just got to be prepared for them. That's the most important thing to remember. And the other thing is, when you get a mature company like this, usually portfolio managers would look at any sudden cascade to the downside as a buying opportunity. My only concern about it is that within the whole sector of the biotech stocks, in the maybe 24 stocks that I follow and look at, many of them are looking very tired, and I think that they're just kind of, this is a period of digestion. So that's what I wanted to say. And to tell you the truth, I probably would not have changed any of my analysis when I spoke to you, that if there was a turnaround, the best case I could make was that there'd be a double top in that 107 area. This is very unusual to have made an F, pull back, and then gapped up, and then continued day after day. 1, 2, 3, 4. This is the 5th day of higher highs. So something's going on.
My family suffered for it. My wife and kids got the brunt of it because I was so grumpy the last few days.
Well, you don't have to be grumpy because you've done very nicely. You always play this very well. So I'm just going to say to you
I made a fortune on Gilead, but I just I punished myself. I I really, really hold the pulse of, like I've told you before, and I don't think anybody should be in here with any sort of decent-sized money if you're not ready to hold the pulse of these stocks. You cannot rely on just checking in once in a while. It doesn't work.
Yeah, and not only that, you've got a really good field. You focus on a couple of them, and that's what you keep trading. I love when people focus on something, and that's what they keep doing over and over. So I have to say to you, I'm sorry about that. It needed just another couple of points, and that would have been a great entry. But in the meantime, you know what? It's going to give you another chance, maybe by Wednesday of next week. So sorry about that.
Health is everything, Basil. Health is everything, and everybody I know and myself are in good health, and that's really what the wealth is.
That's fantastic. I've had some real bad news over this week and last week and the week before with dear friends, and it's just kind of, you're absolutely right. Health is the most important thing.
You're a little older than me. I'm 49, but still, even at my age, I'm starting to see a lot of people that I know getting sick and their parents passing, and it's scary.
It is, but you have yourself a great weekend. Call me again. We'll look at these stocks. Thank you, Scott.
Thank you, Basil. Bye-bye.
Thank you. Let's go to Ben in Tallahassee. Ben, how are you?
Good, Basil. How are you?
I'm well, thank you.
Great. Just highlighting your Trader's Corner with XLF and kind of approaching this from a multiple entry approach. Kind of a short-term, bigger question, longer term, I guess, through the summer months and maybe year's end. I know there's probably going to be some shorts that could work well over the next, let's say, month or two.
All right.
But are you thinking your approach with XLF from a bigger market trend, and like you say, the direction of the wave and the tide? Do you see this more of as if I took the approach of just buying the dips? Because to me, the XLF, if it goes up, there's probably a 90% chance the rest of the market's going to go up.
If the there have been periods, I'm going to do some work over the weekend. There have been periods where the auto stocks have gone independent to the market. Very seldom, but it does happen. There have also been periods where the financials go independent to the market, and I'll try to highlight that. And I'm beginning to think here that the range on the XLF is starting to become very much more well-defined. That's number one. Number two is that all the bad news and everything about the financials at this particular point has seen corrective action, both politically, in terms of the legislation, all the parameters, all the stringent criteria that have to be met. I'm thinking that as a safety move, that the financials will come down if the market suddenly turns down. But there's an area that says to me, within the context of all the sectors, this is probably going to be the belated one, just like the real estate is the belated one in the sense that there was an incredible correction in 2007 and 8 and 9 in the both the properties in real estate, the REITs, the commercial, the private, the multifamilies. I think, but the Northeast has held extraordinarily well and is going through. It's almost bubble-like at this particular point. It isn't a bubble yet, but it's almost bubble-like in many of the areas up here in the Northeast. So I'm looking at the financials as having a major correction, and that there were areas that survived, there were areas that were corrected, and that we will see fund managers start to look at the financials more as not a safety thing, but as finally not just a play on whether there's going to be higher rates and therefore it should help the banks. But I think what we'd be looking at is that the financials will be looked at as, for the first time, a little bit more as growth, as a growth area in the general market. Even though if you look at the chart, it's basically the XLF has walked the 9-period exponential moving average. There could be a period that it starts to go under that 2390 9-period moving average in the monthly chart. But 2199 is very strong moving average support. So this is the area. So my idea here is that based on the Trader's Corner, we will start to look at this as some form of accumulation, but it's really just starting very small, and there are certain levels. I would not say just buy the dips. I would have very specific areas on the downside, with the final third being the one that really has to hold support. That's kind of how I'm looking at it, and I'm also looking at it as possibly not rushing. I don't want to do the.
So you're thinking there still could be that double-digit dip here soon.
I'm thinking that as far as the market is concerned, the months and months of congestion that we've seen. Look at the S&P. The S&P 2125.92 is 93 or 92 is the all-time high. We went to 2123.89 this morning. So with all this consolidation, if you just take it from the midpoint, let's take it from the high of the month of February, where the high was 2072. You can see that we've been in a consolidation, making a very tight, it's like a spring-loaded coil. But these spring-loaded coils can be this is the S&P I'm looking at, a weekly chart, can in fact turn out to produce, if I had to put an oval pattern there, it could turn out to produce a rounding top, or it could produce a really powerful move to the upside. And what you have to do is you have to be careful that at the top of the range, just like I talk about rectangles where it can test your patience, because when it goes to the top, you think it's going to break out. All it does is it turns around and goes back down to the lower band. When you think it's going to break down, all it does is turn around and go back. So this is a very important. Sorry, you wanted to say?
Yeah, do you think this is a better strategy where you just simply put the buy stop above and below the horizontal channel?
That's something I thought about a lot in actually many cases. In my own trials, I sometimes like to try these things out. What I have found is that sometimes you think it's a great strategy, but as it gets triggered, it is right at that moment that I'm getting a D or an E, and then you're going to get a pullback. So I want the confirmation that whatever chart time frame you're looking at, if it's the Dow that breaks out, a breakout into the 18,300s is great, but that's not good enough. I want to see you close above 18,000, say 280, at least 3 out of 5 times to say, I'm not just doing it as a one-time thing. Over the years, over the many years that I've done this, decades, I've looked at the century level, the millennium level, where you're looking at 2,000 or 10,000 or whatever it is, and you spike above it and you think, fantastic, and then in a very short period of time on a monthly basis, it doesn't hold there. But if you can see stability, because it's fresh air and it's a new trading range, and it takes a little time sometimes to bring in the new buyers. If you find that they're coming in, all of a sudden you've got something that works beautifully. So in a sense, that is an idea, but it's an idea that I found in this particular environment has worked at times, but other times it can just leave you hanging high and dry. So I'm prepared to do it. I'm first of all thinking that, can you hold on through the break?
Sure, I can. Yep.
Okay, we'll talk a little bit more about it because it's strategy we're talking here. I'll be back. Dow's down 21, S&P's down 2.5. Be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at at 851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Folks, we're back with Ben in Tallahassee. We're looking at the XLF, but we're also looking at other things within that. If I go to the financials, the Goldman Sachs is making a little bit of a double top here, made a peak C in the weekly. It just needs a few more pennies, I think. Let's see, the high was, the all-time high is 202.87, and the high today is 202. Whoa. It's made at leg D. Huh, that's interesting. All right, leg D in the weekly chart, finally there. So we're watching how it double tops here or it breaks out, but the stochastic is good. NACD is good. I don't see any reason why it doesn't hold quite well. At least have a few attempts to get to the 204, 205 area. If I look at Morgan Stanley, all part of the XLF, Morgan Stanley made a peak F in the daily. The weekly is only at C, and it looks like it wants to do that same thing to try for the double top at in the doji high of peak F back in December or January. At the 39.19-ish level. So I'm going through these, and I do say Bank of America's got a little triple top here in the daily, but the weekly is saying, hey, I've got some strength. And the monthly is saying I'm making that soft W formation. If I go through them separately, I see enough of a enough opportunity to pull back a little bit, but at the same time, there's residual strength. For instance, in the MACD of the weekly, if there is a move in the XLF over the next week or two, and let's say during May, of trying to trying a rally above the recent high of today, and it goes to the 25.85 to 25.30 level now instead of a little later, all of a sudden you're going to get that MACD to cross positively in the weekly chart, and that's going to say, hey, that last high, very unusual peak B, it hasn't failed yet, but it looks to me like there could be a retest of the 25.14 level, and that I would like to see it sooner rather than later. But at the same time, if you're looking at a consolidation going on, then you've got a trading band that really has a 2350s as very good support so far in the XLF. So that's my thinking is, I don't think you need to rush, but I do think you can start positioning now, kind of layering in with the anticipation that the 200-period moving average of 21.99 might be a worst-case basis for the XLF. But boy, if it starts to move anytime it can hold on a monthly basis in the 2550 or higher area, that's just a point away. That's going to be very positive for the monthly chart. Does that help you? Does it give you some sense of what I'm looking at?
Yeah, it's just one of those things where I think a lot of people are just frustrated with kind of figuring out where the hell this market's going.
Yeah,
but
when you're in a trading band, and that's something I identified it early, and I should have said, you know what, if you've identified a trading range, rather wait for the lows to be hit to go long and wait for the highs to get hit before you go short, rather than doing the shorter term trading. But I'm at the position now where I'm looking and I'm saying, I'm not sure how much longer the actual trading range between 17,500 on the Dow and let's call it 18,300 on the upside is going to go on for. It could go on for even longer, but I want to start positioning myself as if we're coming to the end of it, and then we're either going to break down real soon or we're going to break up. But the range is possible. The range change is possible over the next week or two, and I want to try to position us looking out a little longer term, and this time I want to be able to have some positions that say these are the entry points if we're going down, but if we're going up, I would like to at least be in them so that we can add to on the way up.
Good. Well, thank you very much, Basil. Unfortunately, none of us can tell the market where to go, right?
We try. It just doesn't listen.
We do our best, don't we?
Absolutely. Hey, thanks, Ben. Have a great weekend, Ben. Tallahassee, Florida. Folks, the Dow is down 25, and we will be back on Monday. Have a wonderful weekend, and for my subscribers.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,